Okay, good afternoon, everybody. Welcome to Paul's Monday Market Update for Monday, 30th of October 2023. I hope you're all well. Hope you've enjoyed your weekend. I hope that you can hear me. I hope that you can see the slides. If someone here is in the room, if you could just let us know, I'd appreciate that. Just make sure that tech's working and we're starting out on the right foot. That always helps. Fabulous. Thank you, Daphne. Thank you. Welcome to Paul's Monday Market Update. For those of you joining us for the first time, the Monday Market Update is literally that. It is me racing through as much as I can fit in about 25, 30 minutes, looking at strength and weakness within FX markets and some of the other major markets, then having a look at some charts of interest, okay, that you just might want to sort of keep an eye on. And then we look at the live markets. It is my view of the world. Okay, it's not a signal service. It's not trade recommendations, etc. It's just my view of the world, which may sort of be of interest to you. As always, you're very welcome here. Just remember that you are responsible for your own trading decision. For those of you in London, you might be interested that Friday, 17th of November will be the stage 4, which is really all about a workshop on improving trader performance. If any of you are particularly interested, it's a day in London looking at focusing on managing risk, managing self, and then preparing to be a fund manager and managing other people's money. It's a day in London followed by 4 2-hour online sessions. If you have any particular questions or interest, you can ping me on the email there, or as you can probably see, there's a QR code there if you want to take a photo of it and get the details on it. Also, after this, I will be delivering my normal Monday afternoon session for active trades at 2 o'clock to 3 o'clock London time. It's this week's is all about how to trade gold, so I'll be just talking through that. Once again, the QR code is there if you want to take a screenshot or join us for that. Then you are very welcome. So let's cut to the chase, though, and where we talk about start as always with the STAM, which is my weekend work. Okay, where I'm just looking to identify where's the strength, where's the weakness within FX markets, and then indices and commodities. So bring up the old drawing tool here. Okay, so where are we? Here we are. Okay, week 44 of the year, only 8 weeks of the year left. Looking at where's the strength and where's the weakness. Not a shock to see Swiss franc remaining top of the pile there, although the price action towards the end of last week was kind of interesting. Also, we see US dollar, okay, holding on to its place there. Shouldn't be a massive particular shock, okay, that they are still there. What we did see over the weekend was that the Israelis started to sort of launch, or at least prepare their sort of ground offensive. I was watching it on Friday evening, quite some barrage that was going on, and that I think as we see more of the data or the details come out of that will have an impact on markets in what is already quite a chunky week ahead. Okay, so what we also have is Japanese yen here. Okay, it's nudging its way up off the let's say off the floor. Remember what I say when you're in the when you're in the STAM, okay, when you're at the bottom, the only way is up, and when you're at the top, the only way is down, and the yen has been weak all year, basically. But we see it's starting to see nudges that might happen, and invariably we have the Bank of Japan have their meeting tomorrow. Okay, and whilst nobody's really expecting a change in interest rate, were that to happen, that would be a shock. But what people will be taking note on is any sort of change in sentiment. Okay, and that's what we'll see. And you may already start to see that over the yen pairs. Okay, in particular dollar yen, which is price action's been interesting there, but we'll look at that on the live part a little bit later. Euro continues to hold up there, but as I keep saying, my own view is that euro strength is more it's more an element of some dollar weakness. Okay, that's my particular view. Okay, that's what we're particularly seeing. Sterling has strengthened a little bit there, but the reasons for that are as opaque and obscure as anybody else. There is the MPC meeting again on Thursday this week. Once again, people aren't expecting a change, and with all of these news announcements, it's always between expectation and reality. People aren't expecting a change or a raise in rates. However, if there were one, same with the FOMC on Wednesday night, okay, in the Bank of Japan, it's the case of people aren't expecting one. So if there was to be one, well, then invariably that would cause a bit of a tiz within markets. And I suspect most traders, investors are just going to be focusing on looking at the kind of commentary and whether there's any change in sentiment there. What we see is we've got the bottom of the pile. Canadian dollar, despite the recent relative strength in gold and oil, is falling away there, and Kiwi has collapsed to the bottom over the last couple of weeks, and you can see that when we look at the charts themselves. Although if we look at today's session, we've got those boys. They're a little bit of there's a little bit of risk on sort of giddiness, shall we say, there, okay, into the market this morning. You can find your own reasons for that. Maybe it's a case of that they think that the Israeli operation will be a little bit curtailed or not as major as they thought. You can find your own narrative basically, but there is an element of some risk on giddiness there. Whether that how long that will last is another matter. So it's going to be an interesting week. Okay, lots of geopolitical events, but also lots of formal economic news coming out. So as always, just make sure that you're managing risk. If we look at the strength and weakness, when we look at the kind of the indices and the commodities, well, you can see there, Dow is a strategic sell, S&P strategic sell, Russell very much strategic sell, and even Nasdaq is a tactical sell. DAX and FTSE on my models, all right, they're all strategic sells. Even Nikkei's tactical, Aussie's, strategic sell. There's a lot of red there. Okay, and as we look at the charts, you'll see why. On the flip side of that, gold has had a good couple of weeks, hasn't it? It's had a good couple of weeks, which we'll look at in a moment. And as I said, I'm going to be talking about trading gold in the active trades webinar at 2 o'clock today. Silver's bullish as well. And Bitcoin's had a good couple of weeks, all right. Although, as I suspect, that's more a case of maybe people not buying as much dollar as they were. Okay, it's a reflection. I don't necessarily suspect it's a reflection in Bitcoin strength, more a case of dollars having a little bit of a couple of weeks of messing around. So very much a risk off. All right, the tactically, regardless of what the price action has been like this morning, we are still in a kind of risk off environment, and I think what will happen is by the end of this week we will get confirmation of that. I also think we've got today and tomorrow, end of the month, they are going to be volatile. Okay, so just make sure that you are managing risk and that you have a good trade plan, that you know what you're doing, because I think we could have an interesting couple of days in what is going to be an interesting week. So plenty going on there. So let's just clear this off and move on. Having a look at the charts of interest, and what have I put in here? So I don't consider myself an equity specialist. This is more a case of, traders love to look at charts. Certainly I do. And it's a case of, what's going on there that might be of relevance or interest to us. So but all of the emphasis has been on about how the indices have been dropping and they've been bearish, and also about how the Magnificent Seven, those US tech stocks, have been basically holding them up. What has been less well covered, I think, is that whilst all that focus has been on those US tech stocks, if you look at banking stocks have not had a good few weeks. Right? They have really been struggling, in what has been, it's been a couple of months of struggling. So I thought let's have a little look at some of these charts here of some of the major banking stocks. I mean, of course, this morning people were excited because HSBC, had announced some numbers, and they're doing a share buyback, all this kind of frivolity, should we say? But actually, if you look at some of the, let's say, the bigger stocks, the bigger bank stocks, it's not a particularly pretty picture. So this is just Goldman Sachs on the weekly chart there, and you can see that they tapped out here. They're really nice bearish key reversal. But what we're more interested in is, look what's been going on the last few weeks. The last few weeks has just been a really good sell off there of it. We've got beneath $300 now, beneath the weekly 200. So there's this kind of level of support you can see here between about 300 and about 285. What I would expect is, personally, I'd expect, as you can see, we've dropped. It wouldn't surprise me if we came back up, and I'll be looking to see, does it retest 300, and does 300 turn from support into resistance before we get another leg down. But that is definitely a thing on both the monthly and the weekly charts. That has been providing a sort of bearish trade signals on that. Kind of nice to be able to see that playing out. If we look at a couple of the others, who else? Yeah, Citigroup. All right, so I should probably announce, sort of in the interests of transparency. I've got a couple of cousins who work at Citigroup and stuff and what have you, but I assure you, I get nothing from them. There's nothing of interest to talk to them about. corporate banking and all that nonsense. But anyway, what we're interested in is looking at the chart once again, weekly chart. Topped out there at $80. Okay, big evening start, but recently, as you can see for yourself, really all of the highs have been lower highs. Okay, and we've had this kind of $40 level where, it has acted as support in the past, and it looked like it was going to act as support for the last couple of weeks. Bosh, we have broken through that, okay, and we're closing beneath it. And so, once again, I'd be interested to see, does it come back up and test 40, and does 40 turn from support into resistance before another leg down? That's what I'd be looking at that. But as you can see, these numbers aren't, these figures, these charts, they're not. I was going to say that they're not terribly confidence inspiring, okay, but clearly they're great if you've been short. But there you go, Citigroup there. Who's this boy? Bank of America. All right, Bank of America, you probably start to see a bit of a theme here. And namely that, having topped out a couple of years ago, all right, that was a really nice double top there. Once again, we have literally the highs have all been, we've been getting lower highs. $30, all right, which had acted as support, okay, over the last couple of years. You can see it there. Support resistance, we've dropped through that right now. We're near 25. Okay, that has literally. Oops, excuse my drawing there. You can see how it pivoted around 30. All right, for a good couple of months. In fact, good couple of months. This is the weekly chart, but it's almost like it's leading the banking sector lower, isn't it? You can see that is just working its way down that. So James says a good time to get greedy, according to Buffett. Well, that is true. That is true. The only thing is that that depends upon whether you're a trader or an investor in this. That also depends upon what your timeline is. Whether you're looking to buy for 2 weeks, 2 months, 2 years, or 2 decades. Okay, but certainly, I'm hoping you're getting the impression that, as I said, whilst the world is all focused on those US tech stocks, these banking stocks that, they have been just falling away again, and it doesn't seem to be getting a great deal of coverage, does it? It doesn't seem to. Everybody's, nobody really seems to be talking about it. Okay, it's we are lower now than we were when banks really fell off a cliff in, what was it, March time after Credit Suisse, etc. A lot of these are lower now than then, which is kind of telling. A little bit closer to home, NatWest Group here. Okay, so and you can see for yourself once again, weekly chart, and this is NatWest. A lot of this has been done by its own. They've done this themselves. Okay, from being up there at £3. Okay, what we have seen is they got basically collatered by this, the kind of repercussions of the way they acted with regards of Farage and his banking and his little throwing his toys out the cot over his coat. But regardless of the Farage, the way they acted is not terribly it's not terribly confidence building or confidence inspiring, and invariably just gives you an insight into how these banks operate and how they really work. And as the report has come out from that, well, you can see for yourself the impact that that's had on NatWest. Though that's absolutely collapsed its way through that £2, which once again was resistance turning into support, wasn't it? But not a chance here. I wonder if we get maybe just a little bit of an overreaction, and once again it comes back to £2, and then as always, does that support become resistance before another leg down? But it's not terribly pretty in terms of the charts, as I said, unless you're short. Yeah, and this is KBW, which is the ETF for banking. Now, of course, this year, a lot of people have looked at KRE, which is US regional banks. This is the overall Invesco ETF of the overall banking sector. And you can see for yourself, not a massive difference, is it, from what we're looking at in the individual shares, okay, having peaked out there 18 months, 2 years ago, and just really been in one way direction trajectory, and this is coming back down to its lows. The lows that we saw earlier the year after all the this was the Swiss banking and everything. We pulled up for it. Would you call that a gap, Phil? You probably would, but you can see for yourself, it's just, once again, that has just been one-way traffic for the last few months, and that's what we're looking at. And as I said, whilst everybody's focused elsewhere, these have been providing let's say insight and commentary into the true trajectory of markets once you get away from the focus on that Magnificent Seven. So there you go. As I said, just charts of interest, something you can take away and have a look at. Okay, some there's kind of, there can be a learning point. There can be something you might want to add to your watch list and keep an eye on. But it's giving us a bit of insight into what's the story. Right, so let's switch across to the live market. So just bear with me a moment, and we'll switch across. So just bear with us, right, and we'll have a little look at the kind of the overall indices, commodities, FX pairs. Right, here we go. So these are the my overall kind of indices. So I've got let's just take this off. It'll take too long. So I've got Dow, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. So they're all on the weekly, and you can pretty much see the sort of the route of traffic we've had. And last week was another sort of very bearish week, wasn't it? Okay, on the Dow, even on the Nasdaq, okay, on the S&P 500, and also on the Russell. And you've heard me say it quite a few times, is that the Russell really has been the kind of I think has been the kind of the leading player in that. Okay, and you can see for yourself, how that looks. It doesn't look terribly pretty at all, does it? Doesn't look pretty, and as I said, the Nasdaq is kind of held up the best of all of them, but that's because of that Magnificent Seven. But even that, that is, that trajectory over these last couple of months has been down, and for me, I think one way or another, I think we drift to 14,000. Okay, where the 50 weekly 50 gets to it, and then we make a decision there. Okay, that becomes an inflection point of where markets want to particularly look at. You can see on the daily chart, we dropped our way down to the daily 200. It wouldn't surprise me if we had just a little bit of a reaction, a little bullish reaction there. But longer term, I'd say there's still bearish, and if we, as I said, if we get any surprises this week on interest rates, and if we get any kind of escalation in the Middle East, all of those things are going to have, all of those things will sort of have that hangover and give them a bit of a kicking. Let's have a little look at DAX as well. So this is DAX on the weekly chart. Those of you who have been there for a while, DAX weekly, it double top there. That double top finish with a bearish engulfing candle key reversal. We went sideways for a while, and then we just rolled over, and that's what we've been doing. We've been working our way down. The 50 acted as a level of dynamic support for a week or two before you can see that's that 50 flip, and now we've dropped our way through 15,000. Okay, so I did a piece for a broker in September, and I thought when we were back up here, and I thought we would move down, but I didn't think we'd slice through 15,000 as quickly and as easily as we actually have done. But it's the thing of when a market rolls over, it truly wants to roll over. If I go down to the daily chart on it, that has really, since the middle of September, okay, once it kind of broke out of that range over the sort of summer range, it has just been in a kind of nice move down. And what we saw was, having broken through the 15,000, we came back up to it, and we flipped it, all right, and we've moved our way down. And we did have a good close in terms of a good strong bearish close on the Friday. Once again, it wouldn't surprise me if we came back up to 15,000. Then we're going to be looking at this, is by which time I think the 20 will be down here, and then we're at a point where it's got to make a decision. It's got to make a decision. Is this a double bottom that it's formed? All right, before it ramps its way up, in which case we need to get some kind of news that is going to basically support that, or is it a case of this 15,000 turns from support into resistance, okay, before we get another move down? So in all of these things, my view is on these indices is that I think we'll get a little bit of a pullback, but I would still be bearish. But it's a case of we wait to see how does price react at significant numbers and levels. That's my style. Your style might differ. That's absolutely fine. As I said, I'm just giving you what my particular view is. So while all those indices look, woeful, on the flip side of that, okay, in the present climate, gold's had a really good October. Okay, this is the monthly chart of gold. You can see for yourself how the price action's been. We'll look a little bit detail. We finished last week. Back up at 2,000. All right, and you can see for yourself. Okay, we've had interesting price action here over the last few years. Every time we've got to 2,000, it has backed away from there. It's rolled over. Is that someone suppressing it? Is that all sorts of other shenanigans going on? It, it's as good a narrative as anything else. You can really choose whatever narrative you want. Ultimately, we're traders, and you have to just trade what you see. And you can see that 2000 has been very strong resistance. Now people are going to be looking to say, well, actually, is it going to burst? And is 2000 going to flip from being resistance to being support? That's what I think a lot of people will be interested to sort of see and try and understand over the next sort of kind of couple of weeks. If you go into the weekly chart, okay, we came down, we bounced off the 200 period moving average, turned it into a morning star, and you can see for yourself the weekly chart rallied its way up there. And as I said, if we go into the daily chart, it's been a great run ever since that was the start of the kind of issues in the Middle East. Those of you remember, we talked about it. The Friday, it printed a bullish key reverse. We gapped up, all right, and then gapped up, and then we've just literally carried on going up to 2,000. I think I said at the time, once it breaks that 2,000 is that big round number that basically price is just getting drawn and attacked it. James says gold reacts to war for sure. Well, yeah, it does, James. That's the you're absolutely right. It's everybody runs for safety. Capital is a coward. All right, it will run and hide in the safest place at the first sign of trouble. And you're seeing this. This is it's a visceral reflection of it right in front of your eyes. Okay, to see how markets are reacting. And that is that just shouldn't. If you look at that, if you've been long gold, that's fantastic. Right, you've had a fantastic month, but it's not really it's not really a reflection of confidence in global markets, is it, when you're seeing gold rallying that hard and that strong? But, what we're interested in, 4-hour chart, if you look at that, at the end of the week, pushed up to 2000 and closed, we've come away from it a little bit. But, just look at last week, every low was getting higher, wasn't it? It was really lovely support there. That is kind of almost like it's like an ascending triangle at the end of an uptrend. All right, and it's no surprise that it's popping its way through. And as I said, I think price will pivot around 2000. I think we'll get some messes, but people are going to be wanting to say, can it actually hold at 2000? Can it get above and flip it from resistance to support? That's what the question will be this week. Right, everyone will be looking to get some ideas off that, and that might get shoved by external external factors. If there's escalation in the war, or a bank comes out and says we're broken or something like that, then these are the kind of external factors that might give gold the shove. But if you've been trading long on gold, well done. You've done well on that. An element of that, as I said, is also a reflection of kind of the dollar's performance over this month. And we'll look at that now. Let's look at how that dollar's holding up, and then we'll have a little look at maybe we'll have a look at like a kind of a Swiss franc and sterling. Well, no, maybe yen. All right. So let's have a little look at. Here's the chart, dollar index. So if you look at this, here we are, today and tomorrow, trading wise. The monthly candle, there's a little bit of, that's a spinning top. It's a sign of indecision there, isn't it? After the great run we've had, there's a little bit of indecision there. If we go down to the weekly chart, that's what we're looking at. We've had, bearish pin bars followed by bullish pin bars. This is the interesting thing. If we look at last week, you'd be looking at that is it is a bullish engulfing candle after the inside bar of the week before. You might say that's actually even a broadening formation pull. There's a bit of a broadening formation. It is definitely the range there. Okay, is it taps lows and highs. And normally I see that to kind of ends of moves, all right, because basically the big boys are clearing out orders left, right, and centre, and just basically frightening people left, right, and centre. And if you look at the daily chart, the daily chart for the last couple of weeks has not exactly, you might say for the whole month, has not exactly been pretty on the dollar index. if you look at last week on the 4 hourly chart, just look at how, from the week before, we came down, cleared all the orders out beneath, we shot up, cleared all the orders out from the top, and now we're back into that range. And it wouldn't surprise me if we stayed in there until maybe FOMC data, okay, unless there's an external factor. But normally when I see things like that happening, normally I would associate it with the ends of trends. They're clearing out orders and just basically messing people around. Okay, but either way, if you look at that, as I said, if we finish the same place, it's going to end up, yes, there'll have been a bullish close, and then basically, but then but it's still that's indecision. All right, that's indecision. So just as I said, just bear that in mind, especially last week's weekly candle, because if we start looking around some of the others, it's not massively okay. There's elements of it that it works with. So euro against US dollar, you can see the opposite, the downtrend. Last week, we're pulling back, but my view would be this is more like a bearish flag at the moment. But if we go down to the daily chart, if you look at the daily chart there, okay, for this month, we pushed to a new low, but then we've tried to push higher and we'll come around, and once again, it is the price action there is not, it's not massively conducive to either to the bears or the bulls. Maybe it has to get for me, it has to get way up above the 50-period daily moving average to give any kind of bullish intervention. But the price action there is not, that's a bearish pinball there. Could it be there's a bearish flag that there's a final push down to sort of to mush that? And when I look at cable, we'll look at it in a moment. But if I look at let's say, for example, Aussie last week against US dollar, once again, it tapped both the highs and the lows. Right, it tapped the highs and the lows, and it might be a bit of an indecision candle, but it's clearing out orders left, right, and centre. Okay, and that I kind of start to take notice. That they did the same on cable, but we'll look at that in a moment. Not so much on dollar Swiss franc, but it was still kind of having had the drift on Swiss franc. We had a bit of dollar strength there, even though there's indecision on the higher time frame. There was a little bit of dollar strength there. More about Swiss franc weakness, which we'll look at in a moment. Dollar yen. Let's switch to yen and have a little look at that. Anyway, all right. We're going to probably overrun a little bit today. I apologise. So just because there's so much been going on. All right, but there's plenty for us to talk about. The two I'm interested in is basically dollar yen. Okay, so dollar yen 150 last week. We shot way above it, but actually we ended up beneath it. We closed almost like a false breakout there. If we look at the 4-hour chart, we assaulted 150, which every time it's got close, it's been intervened. You can see that yourself. But actually, this time we went quite a high way above it before there was intervention, and then invariably, then we saw the move back beneath it. Okay. And so we're back beneath 150, and that is kind of a little bit what we're seeing, what we have been seeing. Okay, with quite a few of those pairs, there's regardless of the intervention, and the biggest version of that was Swiss yen, which Swiss yen has been exceptionally strong. You can see that that's the daily chart for October. Okay, and you can see that was basically intervention followed by also the Middle East kicking off. And you can see Swiss against yen was, you can see who was the clear winner. But if you just look at that over the last week or so, that's just kind of worked its way. It's fallen its way over, hasn't it? That Swiss last week, we peaked the sort of Thursday, Friday the week before. And then last week, we just rolled over, which accelerated into the end. Okay, it's accelerating to the end. Now, I know this week we've had a little bit of a bump so far, but that's not a massive shock. But for me, that is quite telling. That's a tweezer inside bar, tweezer top breaking at recent highs, and I wonder if this is all an element of us starting to see maybe a little bit of yen strength coming back into it. Okay, we've seen it against the dollar, seen it against the Swiss franc. Dollar and Swiss franc have been top two of the STAM. All of these things can you start to take a note of and wonder if this is what we're going to start to see a shift into Japanese yen. All right, let's finish with sterling's trading a little bit this morning, okay, but let's just pull these charts up. Let's just bring them up a little bit higher time frame for us to be able to look at. So cable weekly chart. Remember what I was just saying on the dollar chart, namely that last week's candles there, they were completely engulfing the previous candle, all right? They're completely tapping the highs and lows of the previous candle. And yet that is it's a very bearish kind of like, I think I said it a couple of weeks ago, I still think 120 becomes the kind of magnet that drags cable down. If you look at that daily chart there, okay, on pound against dollar, we started off at the start of the month. We pushed to a new low, and then we printed that is bullish engulfing, bullish key reversal. We traded away up, we broke through structures here and stuff, and I thought, well, maybe we'll get a little fallback, and maybe we'll get a little bit of strength, running up to the sort of 200. But as you can see, these last 2 weeks, if you just look at that last sort of 2 weeks of trading has not been easy, is it? That is just, you're getting battered left, right, and centre there. Okay, you're getting pounded, one way and then the other. Okay, last week, we had a pop and then we ran down nicely on the 4-hour charts. But outside of these kind of spike movements, the rest of pound against US dollar is not. There's nothing terribly exciting there, right? Nothing terribly exciting there at the moment, okay? And of course, this week we've got FOMC and MPC, so I don't really expect anything there until after that news has come out. Pound against yen, all right. Last week was, that is a PO20 bearish pin bar, okay? No surprise that kind of maybe dropped down already at the start of this week down to those kind of lows of that area. So actually a really nice Pac-Man trade there this morning on pound against yen, as there was on cable as well. Really nice Pac-Man. Pound against Swiss franc. Pound against Swiss franc, the weekly chart here, you can see, we broke out of that, didn't we, a couple of weeks ago. We had that real Swiss strength after 111 being level of support. Last week is a bullish inside bar, okay, and we've had like basically a 1, 2, 3 bottom there. I wonder if we get back up towards the kind of 111. I think there's probably too much space, too much resistance to get to 111, but it would not surprise me if we did continue to drift up there. I think, as I said, there's a little bit of Swiss franc weakness coming in there, although I'm not entirely convinced why, right, based upon the world we live in at this particular moment. All right, listen, I've overrun a little bit there, so we'll end it there. As I said, as always, I appreciate I'm just flying through, trying to share with you as much as I possibly can in a kind of half an hour or so. This is going to be, there's chunky news in an interesting week at the end of a month with major, let's say, geopolitical events going on at the moment. So it is going to be a volatile week. Okay, so be sure to have a trading plan. Be sure to make sure you're managing risk. Make sure that you know when the news is coming out, all right, and what's going on there. And I hope you have yourself a great trading week. For those of you on VTP, there'll be the stage 1 call tonight at 7, stage 2 call tomorrow at 12:30. And for the rest of you, I hope you have a fabulous trading week. Okay, and I look forward to speaking to you soon. Take care and trade well, everybody. Cheers.